Hello and welcome to this MF Corner special. There has been so much talk about the China market, about the fact that, that market remains under pressure and market valuations have corrected in a big way. So to discuss whether all of this and this fall poses an attractive investment opportunity and how you can really look at approaching this market now, I'm joined by Mohit Gang, CEO of Moneyfront on the show now. Mohit, as always, it's a pleasure to have you and on a topic which we've never discussed here before, right? It's very interesting what's happening with China. And there is two ways to look at it, right? A, that the market has, fallen so much, it is so cheap. And the second one is to sort of ask yourself, why are valuations so cheap? How do you look at it? And do you think that this kind of fall can pose an attractive opportunity to investors?
Hi, Pavitra. Thank you so much for having me on this conversation. I'm quite glad that we are discussing China. I think this is one topic which it's got totally ignored by virtue of whatever Indian markets have done so far. Right? And we are so intertwined in Indian markets that we fail to ignore the global markets around us and the kind of noises they are making. Look, I think the question whether Chinese market is a value trade or is a value trap, I think that's been confounding the investors for some time now. But just to give you some data points around this entire thing, Chinese markets today, the Shanghai index today, quotes at a trailing 12-month P multiple of almost around 8.5, 8.3 times, right? In last 20 years, the Chinese market has seen this kind of a valuation only for 4 times, 2011, 2013, 2017 and now. Okay. And whenever they have seen this kind of a multiple, within a period of 3 months to 20 months, the markets have bounced back from a range of almost 40% to 90%. Oh. That's been the range, right? So the bounce back has been phenomenal. Look, a Chinese market, which is as good a growth story as Indian market, all said and done, China last year in 2023 grew by 5.2% on a base of 3% in 2022, which is not a bad number for a country and an economy like China, right? We obviously talk about India growing at 7.3, but China also did a 5.2 kind of a number. To my mind, this is the year of dragon, right? As the dragon year kicks off in China, which is just the new year just kicked off, right? I think Chinese markets are slated to give a very good tactical opportunity to the investors, people who have very high risk appetite. I'll again like to repeat it on this table, extremely high risk appetite and can bear volatility, might just want to punt in with this kind of a trade. To me, I think the Chinese markets looks extremely rich, and just from the sheer fact that the valuations are very attractive right now.
So at these levels, say the market stays at this level for some time, you feel comfortable at this point to put money into the Chinese markets and hold for some time?
Look, Pavitra, again, just quoting some numbers out here. And when we talk of China, we talk of Greater China, which is the China market, which is open to the investors outside, not the mainland China, and the Hong Kong market, right? Because it is also clubbed along with the Chinese market. Both the markets have seen continuous negative drawdowns for last 3-5 years put together. If you see the returns of these markets, it's all negative for last 5 years. In fact, the Hang Seng index is now quoting almost at a level which is near to the levels which we saw in 1997 for the Hong Kong market, right? So it's that bad in terms of the corrections which investors have seen. Why have investors lost faith out there? I think there's a lot of story about Chinese consumption not picking up. B, the real estate market out there going through a huge lot of trouble. We saw the Evergrande bust up which happened out there, and plus on and off Chinese crackdown on new age money, the gaming companies, so on and so forth, right? So I think the investors have not got confidence. But to me, the larger part of story which has led to what it has led to is the geopolitical equation. The geopolitical equation between China and Taiwan and the US getting into that angle is something which is playing on in the mind of investors, and which is what has led to the derating of the entire Chinese markets to a large way, right? Can it lead to a full-blown escalation? Look, no one knows the answer right now. But from a risk-reward perspective, if you honestly ask me, the Chinese and the Hong Kong markets at the valuations at which they're quoting, the kind of growth prospects which we see, the kind of companies which are out there, and the huge demographics, the sheer scale of demographics out there, which is equivalent to India, if not more in the consumption power, right? I think it's a great play, a great tactical play to go for.
Okay, very interesting. And, I'm glad that you're telling us so straight up that it is a very high risk kind of bet, but it might be a bet worth taking. So tell me, if I'm looking at, this kind of an opportunity and I want to put in money through a fund, how long do you think I have to be willing to stay invested in this? How long do you think it'll take for us to see some kind of bounce come through?
Look, now that's a tricky one. Honestly, I think with equities, we obviously advise a 3 to 5 year kind of a holding period. But this is more like a tactical pot of money, which I'm talking of. I think if you ask me what's the right entry point, the right entry point is today. Honestly, for these kind of markets, we've seen we are almost nearing the bottom, though no one knows. Perhaps the markets might show you more correction out there. There are again a couple of factors out there. One, today I think the Chinese market is kind of decoupled from the other Asian emerging markets. If you see the Nikkei index, if you see the Indian markets or maybe the Southeast Asian markets, they're all running their own charters and their own codes, right? So Chinese market kind of gives you a hedge on these portfolios. For a minute, if you were to assume that an India story might get sour for a couple of months or 2-3 months going forward in their story in the year, my sense is that that's the point in time when your Chinese markets will do exceedingly well, right? So that China-India equation also comes into play out here. So in terms of timing, honestly, I think right time is right now. Perhaps you can stagger it out for next 2-3 months and take an entry into these markets. And the holding period, honestly, could be anywhere from a 2-year to a 3-year kind of a range, right? When these kind of corrections happen in market, which are like decade kind of corrections, like 5 years, the markets have gone through a correction phase, then the bounce back also is incremental, stepwise bounce back. So my sense is again 2 to 3 year kind of a holding period if you're looking at playing these markets.
Okay, got that. So tell me one thing, these funds which are exposed to China, Hong Kong kind of stocks, how have they performed over a longer period? I don't want to look at just, the past few years because it's a very different picture and that may not be fair, but over a longer period, what are the kinds of returns that these funds have been able to generate?
Look, to be very honest, we don't have a history which is very long enough with the funds in India, right? The options which are available in India, to my mind, there are only 4-5 options which are available in India. The oldest one being the Edelweiss Greater China Fund. It was an ex-JP Morgan fund. JP Morgan sold off its franchise in India to Edelweiss, and then from there on it's become Edelweiss Fund. But JP Morgan still manages the global desk, and the fund is managed by JP Morgan globally. Edelweiss just runs the India portfolio out here. I think that's the one with the longest track record, which is a 5-year track record. 5-year returns, to my mind, are around 5% CAGR return, which is pathetically low. 1 year, 2 year, 3 year is all negative and hugely negative. Right?
But you think that will turn?
Look, my sense is an economy which is growing at 5+% with the demographics which is 140 odd crore people, with the technological innovation and the commodity consumption and the manufacturing capability which China has, I don't have two questions about it that they are a great economy in their own sense, right? So my sense is how long can the valuations be so cheap and how long can the derating go on? Someday the story of growth will again catch up. It is about the local, the foreign investors getting confidence in local companies doing more maybe value building things like declaring larger dividends or going for buybacks to restore the confidence of foreign investors. If that happens, I think incrementally China will see increased amount of flows.
Yeah, and it is only because, the sentiment is not so good that you're getting these prices, right? I mean, the day that turns, you're not going to get these prices anymore. So I completely take your point. Mohit, thanks for joining us. It's a very interesting conversation. And, one, like I mentioned, we haven't touched on before. So that is about investing in the Chinese markets, considering that valuations have corrected in such a big way. And maybe if you're a very high risk kind of investor, if you're willing to take that bet, then like Mohit said, it might be a good time to look at getting some exposure to that market. Thanks for tuning in. We'll be back for more.